So Nathan, before we get to the Fed and what it might have to do with the data that we saw today, where did we go wrong? How do we not see that these jobs were likely to be created following 3 days, basically, of employment data?
Yeah, great question. Great question. Well, first of all, it is notoriously difficult, and I can tell you this from experience. It's notoriously difficult to forecast these monthly NFP releases. They are very, very volatile. But I think underneath that, we were reminded yet again that this is a very resilient U.S. economy. And we have had some data that have pointed to a moderation in activity. And there was an argument, well, is that a harbinger of a sharper slowing? Or is that the soft landing that we've all been hoping for? And these data suggest, these labor market data this morning suggest that there's still a fair amount of momentum in the economy, and certainly does strengthen the case of those arguing for the soft landing.
It certainly does, Nathan, but Mohamed El-Erian was making the point a little earlier on Bloomberg TV that perhaps the Fed is too late. And it's difficult to reconcile the idea that the Fed might be too late cutting rates with an economy this strong, right?
I understand that case. That's very much the economy has softened some. And once it starts to soften, it tends to soften more non-linearly. But I do think that this time is fundamentally different. We're coming out of the pandemic. We knew the economy was too hot. We were calling for a moderation, a cooling in activity. We needed a softer labor market. That was the Fed's objective. And, all in all, I think we're getting that moderation. And I think underneath it, there's still plenty of strength in demand. So I understand the concern that, well, maybe things are going to soften too much.
Yeah.
I just don't think we ought to take that as the base case at this stage.
I mean, is there even an argument to be made, Nathan, if you had a seat at the table there at the FOMC, is there even a case to be made at all for easing policy anytime soon?
I think it's a stretched one. I think the Fed at their meeting, they're going to look at where the economy is, and they're going to say we have time. And I think they're going to wait for more evidence that inflation is clearly on that 2% trajectory that they've been working toward and to which they desire. Now, as they wait, they will be vigilant. They'll pay careful attention to what's happening in the economy. And if some of these signs of softening do seem like, if they appear to take hold, then I think that the Fed will respond to that. But I don't think there's a strong case to cut at this meeting, or really, as you say, anytime soon.
I want to ask you kind of a somewhat esoteric question, Nathan, and that's really about the reliability of this data. We had some news break a little bit earlier about how BLS is actually going to reduce the sample size on the household survey. Now, this is primarily because of budget cuts and not because of anything else, at least what we know publicly. But, there's been a lot of hay made out of the dueling surveys, the establishment survey, the household survey, how these two intertwine, and whether we truly are getting an accurate picture of what's going on in the labor market.
Clearly, there's a lot of noise in the labor market data. I think that's the reason you want to look at a whole range of indicators. But when I look at the claims data look pretty solid to me. The average hourly earnings number that was part of this report, I think, continues to point to some labor market tightness. As I said, there's some other measures, really more about the soft data that suggest some more marked cooling. But all in all, I think that this is a moderating but still solid labor market. Now, final bit that you alluded to is there was a wide gap between the establishment survey, the overall employment number, and what was embedded in the household survey. But I can tell you that the Fed, and I was at the Fed for many years, has historically taken a lot more signal from the establishment survey and sees that as being much more reliable, notwithstanding the fact that even that has some challenges.
Nathan, Citi now expecting a first rate cut in September and not July. That's a little bit of an outlier call in the sense that we are just 6 weeks to 2 months away from the election. A central bank would love to not even have the appearance of being political, right? And there will be a lot of people saying the rate cut cycle cannot possibly start before the election or that close to the election. Would that give you pause at all in this Citi call?
Continuing to draw on my experience inside the Fed, I think the DNA of the Federal Reserve is to follow the data and seek to do the right thing at the right time. And if the data are suggesting that the economy is ready for cuts, and cuts are consistent with the Fed's dual mandate, I think that the Fed will not hesitate to cut, even in September in the heat of the presidential election. Now, as I say that, I think that has got to be the headline. But at your point, though, in quiet moments, when Jay Powell is sitting in his office and he thinks about pros and cons, if he can make a case a little bit earlier, a little bit later for the cut, and it's not right in the heat of battle, I think he'd be happy with that as well. So it's complicated.